There are three key books you need to know about as a startup entrepreneur. Most times, entrepreneurs just go into the business without having the key knowledge about these books, and this eventually determine how much they will grow and how sustainable their business will be at the long run. Even when you've decided to employ the service of an accountant, it's still very important for you to have the basic knowledge about these books. I mean, how would you be able to criticize or know if your so-called accountant is actually doing the right job when you don't even have the basic knowledge about it? And these are very essential ingredients to your business. What are these books? They are called financial statements. Financial statements, in simple terms, are statements of how the financial situation of your company. For instance, how much profits are you making? Is your business even profitable, or is being run at a loss? How much assets do you have? How much liabilities do you have? Do your liabilities overshadow your assets? These are things you need to know about, and you can't know it if you don't prepare and have a knowledge about all these books. How much cash flow come into your business? How much cash come in? How much cash leaves your business on a daily basis? These are things that will help you grow your business, and if you get it right, looking at the quantitative analysis, you'll be able to determine what the things you need to do to make your business sustainable. I'll just look at the overview of all these three books. In my next video, I'll be breaking it down one after the other, showing you how you can do it yourself. Let's start with the income statement. The income statement is simply a profit and loss statement. Most startup entrepreneurs do this for their business, but how do you do it? Are you doing it the right way? Do you just say my profits and my loss and you just deduct it? Yes, that's basically what it is, but how are you incorporating your costs? What cost are you putting? Because sometimes when you do it the simple way, fine, it's simple, right? But most entrepreneurs don't incorporate all their costs when doing this, so that is why it's essential for you to know how to do it right. There's a format you can use, and which won't allow you to exempt any cost. So let's look at the revenue side. Revenue is simply how much money is coming into your business. Let's say you sell a product, let's say you sell shoes, and your shoe costs 1000 naira per piece, and in a month maybe you sold like 10 pieces, that's 10,000 naira. Just an illustration. So that is called revenue, when you're doing your sales minus the quantity that you sold. So when you're incorporating your costs, you're looking at your expenses, you're looking at things like how much you spend for advertising, how much was your transportation, how much is your rent, how much, all those expenses that comes into your business. That is basically what this looks into. So let's move to statement of financial position. This is your balance sheet. Fine, you might say you're a startup company and maybe you started with a very little amount, and you don't need to prepare you don't need to prepare statement of financial position. No, as time goes on in your business, probably you rented a shop, you have things like furnitures, right? Maybe you did a chair, you did a frame where you could arrange your shoes to display and all that. That's an asset. So that's the major reason why you need to prepare this this statement of financial position. It helps you track how much your business is growing, how much assets are you acquiring as a business, and how much liabilities. Probably you started that business with a loan. How much loan do you have to pay? Probably you took an overdraft from the bank to start your business, or probably you even the goods you bought was partly paid for and some was on debt. So this book will incorporate all those loans and overdrafts and how much assets your business is actually acquiring. So that is basically what a statement of financial position do. I'm trying to break it down in simple terms so you know how to do these things by yourself. It doesn't have to be so complex. Do you get it? So the final book you'll be looking at is the statement of cash flow statement. Cash flow statement just looks as just cash that comes in and out of your business. Let's say you started your business with 30,000 naira or 300,000 naira, for instance, and when you started your first sales, maybe the first day you sold something of maybe like 50,000 naira. That's cash inflow. That's the cash that is coming in into your business. Let's say that same day when you started, all these FIRS people came and said you have to pay tax and all that. So they charged you. So that is cash outflow. Sorry, the NEPA just took light. I'm so sorry. So I'll be cutting it short here. All right. Bye.